You are welcome to Remit Trade Forex channel. My name is Paradise and I'll be bringing you this very video. In today's video, I'll be sharing with you 5 things you must do to be successful in Forex trading. Either you are a beginner trader or you are an advanced trader. So watch this video to the end. If you are new to this channel, please help subscribe to the channel, hit that like button, and don't forget to turn on the bell notification for more updates like this every single day. Also check the channel for other educational content. Leave a like and share this video. These are the 5 things that you must do to be successful in Forex trading. You know that Forex trading sometimes can be very tricky and very frustrating when you are not doing the right thing. But if you are doing the right thing, you will find it very easy. So the number 1 thing here is proper market structure understanding. What does that mean? Market structure is a proper identification of the market direction. That means the market flow. For example, if you look at this chart very well, we're on the 1-day chart, and if you look at this from this perspective, you see that market is actually going down. How can we define that market is going down? Because we are seeing a lower high and lower low at these very points. We have a lower high at this very point, we have a lower low here, we have a lower high here, we have a lower low at this very area, we have a lower low here, we have a lower low here, we have a lower high at this very point, lower high here, we have a lower low at this point, just like that. If in this formation, we can put this, say that market is in a downtrend. The same thing, you have to also define if the market is in an uptrend. Just like we see here, market have begin a new uptrend already to the upside, because we see from this area, this is a low and this is a high. The market come down, which means this low is lower than this very low, which gives it a higher low, and this higher than this very high, which is a higher high. So when you see higher high and higher lows in the market, it means that the market is actually moving to the upside, and especially when it breaks key structure, especially at this very point, and also come back to retest this very level of support here, which was resistance at this very area, resistance here. So proper identification or proper understanding of the market structure is very important to your trading as a technical analyst. So you must define if the market is in the downtrend, and when market is in the downtrend, you sell from resistance, and when market is in an uptrend, you have to buy from support. It's your strategy. And then the next thing here is identification of key resistance and support levels. It is very frustrating because most traders, especially newbie, don't know how to identify key levels in the market, because not every resistance and support you see in the market are important. Some are important than the other, especially those one you find on the higher time frame. For example, for 1-day chart and 1-week chart, those resistance and support level, for example, at this very area, are very important than the one you see on the 1-hour chart and 15-minute chart. So you must know how to identify it, and one of the way to identify key resistance and support level is to take note of when the market touch twice, at least 2 touches at a very particular level. It means that that very point is important. Another one is where you see big candle breakout. That means, let's say for example, in this area we have this very support at this very area, turn resistance here, resistance here. But if you look at this candle, breakout happened at this very point, and this candle is significantly huge. Okay, this means that this very point is very strong. So when you see this happen in the market, you take note of this very level, because if market come back down into this level, there is a high capacity that the market will find a hole which will turn support at this very area for the market to move up. What I'm trying to say is that if this market move down from here to the downside, it will find a support here for market to actually move back to the upside. So you must have to consider these very key levels, and like I said, resistance level you find on the higher time frame are very much stronger than the one you see on the lower time frame. So consider trading in line with resistance and support that you find on the higher time frame instead of looking at the lower time frame. And the next one here is you must understand volume and momentum trading. You know, one thing in forex trading is that you don't see volume. Volume in forex is hidden. It is only the big player in the market that have access to such information. And as a trader, if volume is a problem, then momentum trading is very, very important. So how do you trade the market momentum? It's very important, guys, that you understand the nature of the candles. If the candles are very, very big and aggressively moving to the upside, then that means momentum is actually flowing in that direction. And you can only understand momentum when you properly maybe take a course on momentum trading or some other momentum related technique. So if you look at this very area, market move aggressively to the upside, come back down, could not make a lower low than the previous low, and then move back to the upside again, creates a new high, come back down. If you see the way the market move at this very point, is very, very stronger and aggressively compared to the way it moves right here. This also means that market have capacity to still move again in the future from this very area. So that is momentum. It shows you how the market is moving aggressively and how smooth it is. If you look at the number of candles that the market moved from here to this very point, you see this is much compared to the candle market move from here to this very area. Not only that, the length to which the market moved from this very point to this very area is very, very small compared to this point to this very area. So you must have to consider these things to understand proper direction of the market, because the market is all about understanding where the market is going to move to next, and when you be in the right direction of the market, the money is yours. So understanding momentum and volume trading is very, very important in your trading technique. The next thing you must have to do is top-down analysis perfectionist. That means you must perfect your top-down analysis. Why did I call it perfectionist? That means from the first time of doing top-down, you will not be a perfectionist, but as you begin to practice top-down analysis, you have to be a perfectionist on the long run. Now, what is top-down analysis? Top-down analysis actually means doing your analysis from the higher time frame and you go back to the lower time frame. So you do analysis on 1-day chart, you do analysis, then you go back to 4-hour chart, do another one, maybe go back to 1-hour chart to do another one again. This is top-down, moving from top to bottom. Okay, so when you do this, you have an idea of what the bigger players is doing in the market by doing the analysis on the higher time frame. Then you go back to the lower time frame, maybe as a swing trader or as a day trader, to take your trade in line with what you are seeing on the higher time frame, because the higher time frame controls the market. So if you look at this very area, you see the market have started moving to the upside. We see the market move up from here, come back down, move up again, and you see market is already creating higher highs and higher lows, which means the market is moving to the upside. Market come back, support, move up, meet this very point of resistance, come back down again and move up to this very area. And right now market is at this very point. So what do you think about this area? So if you go back to the lower time frame, which is 4-hour, it will give you an expansion of what has happened from this very point right here to this very area. Now, in line with this, you can then know that, okay, if market retraces from this very area to this very point on the 4-hour chart, then this very point is very important on the 1-day. That means market have capacity of going back to the upside. So top-down analysis can be very tricky when you are just starting, but as you begin to apply it gradually, you become a perfectionist in it, and it's one of the trading tools that you can put in your arsenal to be a successful trader. The last one here is risk and money management and trading psychology. If your trading psychology is wrong, then that means you're not going to be successful, or you are risking more than your reward is, then you will not be successful. Or out of $1,000 you have in your account, you are risking the entire $1,000 in a single trade. That's very wrong. So you must do proper risk reward management. I'd advise at least 1-to-1 risk reward ratio. For example, if you are a day trader, 1-to-1 risk reward is okay. That means if you are risking $100, you are expecting $100 from that trade. That's the minimum. Or you can go further to do 1 to 1.5. That means if you are risking $100, then you are expecting $150 as reward, or 1 to 2, but the minimum is 1-to-1 risk reward ratio, and your psychology must be put in check. You cannot have a better psychology by trading on a demo account. It's not possible. Once you begin to trade on the live account, your psychology will be shaped because you are using live account. You are using real money. And every human being on earth have its attachment to a real money, especially when that money is getting hard earned. So you must have to understand that once you begin to practice and trade on the live account, your psychology will be improving on the long run. So these are the things you must put in check for you to be a successful forex trader. If you are new to this channel, please help subscribe to the channel. If you like the content, hit that like button and don't forget to turn on the bell notification for more video like this every single day. And if you want to learn how to trade forex with simple technical analysis and simple strategies and approach, check the description of this video. You see contact, reach out to me immediately and get trained. Thank you very much for watching today's video, and I will see you in the next video.